This is teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from A2 Accounting, and the topic is basically cash budget. Topic is budgeting, and in budgeting we are familiar about the production budget, about the purchase budget, right? About trade receivable budget, trade payable budget. So today we are going to solve a question from the cash budget actually. So let's talk about this. This question has come in October-November 1732. October-November 1732, page number 102 from my book. From the A2 Accounting, Budgeting, Cash Budget. J Limited sells a single product at a markup of 25%. The following information is available. Sales revenue is given. November, December, January, February, March, April, all are given. That is the sales volume. Okay. In point number 2, it is written that all sales are on credit and customers have a credit period of 2 months. Means those trade receivables to whom we used to sell goods in November, they are supposed to pay us in January, after 2 months, November, December, January. So if you are selling in December, it means that you are getting the payment in January, December, January, and February. So not next month, 2 months after sale. So that is going to be like in November, 1 month after sale means that you are paying in December. 2 months after sale means that you are paying in January. So this is how we are. All purchases are on credit. Suppliers are paid in the month following purchases. So whatever goods we have purchased, we used to pay them in the next month. Inventory level at the end of each month will be maintained at 25% of the sales volume or sales amount in the following month. Monthly operating expenses cost are expected to be 18,000, which include 3,000 depreciation. Remember that depreciation is a non-cash expense. So it will not decrease cash in any case. Balance at bank end 1st January is expected to be 4,500. That is already given in the question. Prepare the cash budget for each of the 3 months from January to March, January, February, and March. Prepare a budgeted income statement for the 3 months that we study today. Prepare a reconciliation of profit from operation from the 3 months period ending 31st March to the net cash at 31st March 2018. This is not now in our course. Why, sir? Because it's a part of cash flow statement actually. So now it is used to come in P3 and this part never comes now in the exam. The directors are considering investing 60,000 in a new computer system to improve inventory control. According to the payment term, 50% is payable in March 2018 and the remainder 50% in the following month. Advise the director whether or not they should purchase the new computer. Justify your answer. तो वो फिर हम देखेंगे बाद में. October number 1722 का हमारा सवाल है and we are supposed to prepare the cash budget. So let's start doing it. We are preparing cash budget, sorry. That is for January, February, and March. So that is what is required from us, that we are supposed to prepare the cash budget for the 3 months, January, February, and March. If you just look at the question again, let me make it very clear. 3 months, January to March 2018. Okay. Now, the first important thing in this question, it looks quite easy. That this question is quite easy, that we are supposed to write receipts over here. That is obviously from credit sales, whatever we are getting, we will write over here. And we will subtract payments, obviously, to get the net cash flow. And then we can find out whatever is required. But this question is what receipts we are getting, right? We are getting receipts from sales, and that is going to be 2 months after sale, right? We are getting the amount 2 months after sale. Because all the amount we are getting now in receipts is 2 months after sale. Is there any other receipts given in the question? Receipts mean whatever cash is coming into the business. Because customers are paying us, so cash inflow. There is no other cash inflow, okay? So, sir, it's quite easy question. There is no cash. We are not receiving any interest or we are not selling any non-current asset. Otherwise, our cash will increase because of that in the cash budget. And if we are making payments through expenses or purchase of machine, that will be a cash outflow. Other than depreciation, because depreciation is a non-cash expense. So then what is the difficult part of the question? So let's talk about it now. Do we have purchases available in the question, given in the question? No. Purchases are not given in the question. Sales are given and the markup is given. Markup is a gross profit percentage on cost of sales, whereas cost of sales is not given. Unless we don't have cost of sales, how can we find purchases? Because purchases are also not given. And when we don't have purchases and the purchases are on credit and suppliers are paid in the following month, so how we can pay that? How we can write it in the cash budget under the name of purchases? Like over here, I can write 1 month after purchase, I have to pay. I'm paying to the suppliers 1 month after purchase. So what I'm going to make the payment because the amount is not right with us. So that is the basic question, basic difficult part of the question. So first of all, we need to convert these sales amounts, all the sales revenue, which is given in amounts November, December, January, February, March, April, into cost. So we need to find sales at cost. Okay. We need to find cost of sales. And then we will go reverse to find purchases. So let's first find cost of sales. In order to find cost of sales, we have been given, it's quite easy. Sir, profit subtract kar de, will find cost of sales or sales at cost. It's quite, you are absolutely right. But do we have margin? No, we have markup. So what we need to do, we have to convert markup into margin first so that we can apply it on sales to get the profit, and then profit will be subtracted from the sales amount to get cost of sales. So markup into markup, the formula is percentage over 100 plus percentage. Markup into margin, formula is percentage over 100 plus percentage. So that is going to be how much? 25 over 100 plus 25, that is 25 over 125. Now that is margin. Now I can multiply 1,50,000 into 25 divided by 125. What is the answer? I'll calculate for you. The cost of profit is going to be 30,000. So I will get 30,000. Now 1,50,000 minus 30,000, we will get 1,20,000. That is cost of sales for November. Then December, 1,80,000 into 25 divided by 125, we will get the profit in this amount of sales of December. That is 36,000. And when we subtract 1,80,000 minus 36,000, we will get 144,000. That's fine. Now let's talk about in January. That is 2 lakh multiplied by 25 over 125. We'll get the amount of profit. So let me calculate. That is 40,000. And 2 lakh sales minus profit will get the cost of sales for January. That is going to be 1,60,000. Now let's talk about February. 2,10,000 into 25 divided by 125. The amount is going to be, let me calculate. That is 42,000. Now I'm going to subtract it from 2,10,000 to get the cost of sales. That is 168,000. Now 2,25,000 for March into 25 divided by 125. We will get 45,000. That is the profit included in 2,25,000. I will subtract it. So the cost of sales is 1,80,000. Now for April, again 2,40,000 into 25 divided by 125. You must be thinking, sir, why you are calculating all the amounts and you are converting it into cost of sale? There is a reason behind. Because we are basically receiving the amount from the customers for a credit period of 2 months. So that is the reason that I want you to solve it. Maybe April is not required, but I just want it. April is not required, but I just want it to write it down because it might be used in the future. So where? In the income statement. That is a possibility. So 192,000 is the cost of sales. So we are done with that. So now you must be thinking that, sir, we have found the cost of sales, but what is the reason behind? No. All sales are on credit and customers have a credit period of 2 months. So that is very, very simple. How come, Akshit? It means that the November sales we are receiving in January. That is 1,50,000. And we are receiving after 2 months. So in January, we are receiving 1,50,000. So 2 months after sale, I can write here 1,50,000. That's fine. In February, the December sales of 1,80,000 we are receiving in February. That's even more easier. So 1,80,000 I can write in February. And in March, the January sales of 2 lakh to the customers, because all sales are on credit. So they are going to make us the payment in March. So that we are going to receive in March 2 lakh. So we are done with that actually. So what is the problem then? Problem is basically in payments. Problem is not in receipts. That is in payments. That we are going to make the payment 1 month after purchase. And we don't have the purchases. So that is the reason that I have applied, I have converted markup into margin. I have applied the margin on sales to get the amount of cost of sales for each month. And now it says, it's not the purchases. No, no, no. It's not the purchases. My dear, it is cost of sales. Inventory level at the end of each month will be maintained at 25% of the sales volume in the following month. So it is clearly stated that inventory, closing inventory, is the 25% of the next month sales volume. Next month sales means next month's unit sold. Next month's sales amount, next month's cost of sales. Because we are going to find the purchases at cost. And we have already find the cost of sales. So we have to go reverse, not because of the sales, not by taking sales. We will go reverse by taking the cost of sales. So let's go back. So I need to find the purchases for, remember, I need to find the purchases for December because that is supposed to be paid in January. I need to find the purchases for January that is supposed to be paid in February because we are making the payment for purchases, which is purchased on credit after 1 month. Following purchase. जिस महीने खरीदते हैं उससे अगले महीने पे करते हैं. So I need to find the purchase for December, January, and February to be paid in January, February, and March. But I will start from November because I don't want to get myself confused by making myself confused in November, December, January, February, and these things. So I will start from the whole way for January and then for February and even for March also. Why should I take any risk? So I will write here cost of sales. And what we are going to do, you know that in cost of sales, I will add closing inventory. So closing inventory is going to be added here. Closing. And opening inventory is going to be subtracted. And I will find the amount of purchases through that way. I will find the amount of purchases. The problem is this, that we don't have units. We don't have units in the question. We have amount of sales in the question. So we have converted the amount of sales into cost of sales. And then we are going reverse because we know that cost of sales is equal to opening inventory plus purchases minus closing inventory. So we can easily find, just a minute. We can easily find that we can easily adjust that cost of sales. If you go reverse, we have to add closing inventory, cost of closing inventory less opening. We can find the purchases, amount of purchases at cost. So that is how we will do this. So let's do that. So cost of sales, we already have for November. This is for November. Sir, how come? Okay. See, these are the sales of November, December, January, February, March, April. And I've already calculated the cost of sales for November, December, January, February, March, April. I can use that. So let me write it down first. 1,20,000, 1,44,000, 1,60,000. So let me write 1,20,000, 1,44,000, 1,60,000, then 1,68,000, and the last but not the least, that is for March, and that is 1,80,000. Okay, so let me write the March little bit ahead of that so that you may not find it difficult. Okay. Okay. Now add closing. Very easy. Very easy. How come, sir? It is stated that the inventory levels are maintained at 25% of the sales volume in the following month. Next month's sales units, whatever the sales value of those units or whatever be the cost of sales of those units, the closing inventory will be the 25% of that amount. This particular point has make a mess for the students. Which point, beta? This word. It has created a mess for the students. So all students have done it wrong. All of them, not one, all of them. Why, sir? Because they started believing that closing inventory is the 25% of the sales value. That is wrong. He's not talking about sales value. The examiner is talking about sales volume. Sales volume means units sold. We don't have units sold. We have sales value, which can never be used in calculating purchases. We need to find cost of sales, right? That is the cost of sales of the sales volume, of the sales units volume. And now that cost of sales, next month cost of sales, the 25% of the next month cost of sales is the closing inventory for the current month. And then we can find purchases by going reverse. Let's move back. I have solved this particular point in that question that is available on my channel. And I'm going back. Sir, why? Because I want to show that the same question has come. That has come in October, November 1732. And it has come again according to the same proposition, according to the same complexity. In which year? October, November 2341. After 6 years. October, November 2341. Sir, how come you will be able to know that? I will show you. This is the question 41. Actual sales, budgeted sales are given. So, okay, that's fine. Either it is actual or budgeted. Markup is 50%. So we'll calculate 50 over 150. Then we will solve. 10% of sales are on cash basis. The remaining customer paid 2 months after sale. It is estimated that 2% of the trade receivable will be irrecoverable. So they will be bad debts. The remaining amount you will receive as cash. Whatever is going to be the credit sale, 90%, we are getting only 98% of that amount, or after subtracting 2%. Purchases are on credit. P Limited is allowed to pay 2 months after purchase. However, P Limited always pays 1 month after purchase to get a cash discount of 1.5%. So I have solved it. But the problem is this, which is coming right in front of you. It is the policy of P Limited to maintain an inventory level at the end of each month sufficient to meet 40% of the sales of the coming month. That was 25% in our current question, 1732. But it is here, they have not written 40% of the sales volume of the current month. They have written 40% of the sales of the coming month. Beta, that is the same thing. Because you can't write inventory at market price, at sales value. Inventory is always at cost. You need to find purchases at cost. So 40% of the sales of the coming month means, yes, if September we want to find, the next is the October sales. The inventory is September closing inventory is the 40% of the October cost of sales, not October sales. Oh my God. Sir, how much confusing is this? सर ये तो जाती है बड़ी बच्चों के साथ कि साफ साफ पॉइंट नंबर 4 में लिखा हुआ है इट इज द पॉलिसी ऑफ पी लिमिटेड टू मेंटेन इन्वेंटरी लेवल एट द एंड ऑफ व्हिच में सफिशिएंट टू मीट 40% ऑफ द सेल्स ऑफ द कमिंग, लेकिन सेल्स नहीं है, वो कॉस्ट ऑफ सेल्स निकालनी है आपने पहले ही. ओ माय गॉड, क्या करें भाई, ये लेवल से. So this is how you start believing that the paper is very difficult. So we don't have that much time. You didn't give me that much time कि मैं आपको हर तरह का क्वेश्चन करवा सकता. Unfortunately, कैश फ्लो में तो we are lacking much more questions, but I have given you all the YouTube videos, sent you all the YouTube videos with the maximum level of complexity. So that's why sometimes you feel that paper is difficult, but it is not actually. It is the practice you have not done regarding the past papers, unfortunately, because you were not having my book. That is the reality. Because my book contains every type of questions which are related with each other, as I am showing it to you. चले मैं आपको चैलेंज करता हूं, आप किसी टीचर से ये पॉइंट जो मैंने बताया ये किसी टीचर से पूछ लीजिएगा पूरी दुनिया में, मैं ये नहीं कह रहा लाहौर, दुनिया में, कि सर ये जो ये पॉइंट ये कैसे होगा और ये क्या इसका लॉजिक और ये पहले कब आया। भाई जिसको ये पता होगा पहले कब आया वो बताएगा ना कि कितना मुश्किल पॉइंट है ये। ए लेवल्स इतना ही मुश्किल है और आपको उसके हिसाब से मैनेज करना पड़ता है, क्या करें। सारी बुक आप करेंगे, 4 बुक्स हैं, एक के 900 पेज है, एक के 600, एक के फिर 900, एक के फिर 600, फिर जाके ए लेवल कंप्लीट होता है। तो जब खैर चलते हैं आगे जी। अब क्लोजिंग इन्वेंट्री वेरी सिंपल, 144,000 दिसंबर की क्या है कॉस्ट ऑफ सेल, 144,000, नॉट द सेल्स वैल्यू, इसका 25%, 36,000, दैट इज गोइंग टू बी द क्लोजिंग इन्वेंट्री। ओपनिंग इन्वेंट्री क्या होगी, नवंबर, 1,20,000, नवंबर की जो कॉस्ट ऑफ सेल्स है दैट इज द क्लोजिंग इन्वेंट्री ऑफ अक्टूबर, इसका 0.25, दैट इज गोइंग टू बी 30,000। Now I can calculate the purchases for this particular November, and November purchase is supposed to be paid in December, which was not required actually, according to the question, but it will be required. You will see. Now, next. 1,60,000 into 0.25, that is going to be 40,000. And the same November closing inventory will become the opening inventory of December. So I can find it out. That is going to be 148,000 is the purchases. Now again, for January cost of sales is 168,000 into 0.25, that is 42,000, and the opening is going to be 40,000. So that is going to be 162,000. All students have taken those figures, which is regarding with the sales value. Then 1,80,000 into 0.25, that is going to be 45,000. And the opening is going to be, which is going to be subtracted actually, 42,000 will be subtracted. So that is going to be 171,000. And for March, obviously, we need to find the cost of sales of April. We have it already. Sir, how come? Let's see. We have the cost of sales of April, my dear, 192,000. So 192,000 into 0.25 is going to be the closing inventory of March. You must be thinking, sir, it is not required to be calculated. It is required. I will tell you afterwards. So 45,000 I will subtract. So that is going to be 183,000. Okay. Right. Now let's solve the question. 1 month after purchase, I'm going to write here. So December purchase is supposed to be paid in January. That is 148,000. Here come December. January purchase is supposed to be 162. Is supposed to be paid in February. That I will write here. And February purchases, which are 171,000, is supposed to be paid in March. So we are done with that. So now let's move forward. I'm going to rub it up and we are done with the particular purchases point. Looks so simple, the question looks so simple, but you can easily understand that how much difficult it is for the students to understand that. Because of this particular sales, the name of sales. Now the operating expenses are 18,000, which include 3,000 depreciation. So it means that the operating expenses for each and every month is going to be how much? 15,000. Right? Because 3,000 is the depreciation, which won't come. So that is going to be 15,000. Any other expenses? No. Balance at bank is expected to be 4,500 on 1st January. So I will go, I will go with the net cash here. Then I'm going to write the balance at start, and I will get balance at end. So balance at start is 4,500. It is written. Now let me calculate. 1,50,000 is the amount of sales minus 1,48,000 minus 15,000. So we have a negative cash of 13,000 here. Negative 13,000 is overdraft. And with positive, the balance at the end is again negative. And that is 8,500 overdraft. I will show it in bracket because it is an overdraft. The same overdraft will become the balance at the start for the next month, 8,500. Let's see the net cash for 1,80,000 minus 162,000 minus 15,000. The net cash is positive 3,000 and 8,500, that is negative. So 3,000 minus 8,500, we have negative 5,500. Overdraft has decreased to 5,500. Now for the next month, the same 5,500 will become the balance at the start with an overdraft of 5,500. And let me calculate this. That is 2 lakh minus 171,000 minus 15,000. That is 14,000 positive. Minus 5,500. So we have 8,500 positive balance. So you can easily understand, you can assess that the bank overdraft, we have started with positive balance of overdraft, but now we have at the end of 3 months, we have a positive balance. Again, we have a positive balance of 8,500 at the end of the 3 months. So this is how we are done with this. Now we are going to prepare the income statement. Yes, we have to prepare the income statement for the 3 months. So I will start with the revenue. Revenue for what? Revenue for the 3 months. So I will not use the figures of the cash budget. I will use the normal figures now. Why? Because remember this, that income statement is prepared on accrual concept, not on cash basis. So I will take the revenue for the regular months. January, 2 lakh plus February, 2,10,000 plus March, 2,25,000. So the sales is going to be 6,35,000. So I will write here 6,35,000 is the revenue. Yes, less cost of sales. Opening inventory, I will write. I hope it is given. Even if it is not given, we have calculated that. At the opening inventory in January, we have to take it in January. Let me show you. Opening inventory of January is the closing inventory of December, and the closing inventory of December is here. So this is the opening inventory. We can calculate for January, and the March ending inventory is 48,000. So that is also there. So we can easily write it down that the opening inventory at the start of January is the closing inventory of December, 40,000. And the closing inventory is 48,000, which obviously needs to be subtracted. That is the ending inventory of March, closing inventory of March. Now I will add purchases. Again, the same thing. It is based on accrual basis, my dear, not on cash basis. So purchases, I will take regular purchases from the question. So, but where are the purchases? We don't have. Oh, we have calculated purchases here. So I will take purchases for January, February, and March. So that's why I have calculated the purchases for March. Remember now? That is the reason that I have calculated the purchases for March, because I have to write it down. I have no other choice. I have to take all these purchases. January, February, and March, 162,000 plus 171,000 and plus 183,000. So the total purchases for the 3 months ending, because we are preparing income statement for the 3 months, is 5,16,000, 516,000. Now I can find the cost of sales. 40,000 plus 516,000 minus 48,000. The cost of sales is 508,000. I will subtract it from the sales 6,35,000 to get the gross profit of 1,27,000. And then I'm going to subtract the operating expenses from this to get the profit for the year. Gross profit less operating expenses, which we have total of operating expenses. Quite easy. Sir, how come? Yes, because we have depreciation also. So that is not 15,000 into 3. No, 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 no. 18,000 into 3. Because depreciation is going to be a part of operating expenses. So 54,000 is going to be subtracted as operating expenses to find profit for the year, which is going to be 73,000. And that is going to be the profit for the year, which is required as our question has been asking us to prepare that. So now you can assess what A-level is all about. So this is how I create difference. आपको उस लेवल पे पढ़ाया ही नहीं जाता जो लेवल आपके ए लेवल्स का है, पेपर तो फिर मुश्किल ही लगना है ना, बिकॉज अब वो सवाल आप करोगे तो मैंने बताया वो ऑलरेडी यूट्यूब चैनल पे है, तो आपको और अच्छे तरीके से ये पॉइंट क्लियर हो जाएगा. अभी 50% 70% क्लियर हुआ होगा, तब ज्यादा क्लियर हो जाएगा. सर ऑपरेटिंग एक्सपेंसेस व्हाई यू हैव टेकन ऑपरेटिंग में 54,000 लिखो. वी हैव वेयर इट इज, we have operating expenses of 18,000, my dear, including depreciation. So I have to add all them up. Here it is. 18 into 3, 54,000. So we are done with this particular point. Now the director 60,000 in new computer system to improve credit control. 50% is payable in March and the remainder. We can't do that. Why? Because we don't have the payment. Yes, but it is getting positive in the future. So we can afford that because we were having overdraft in the past, but now we are getting future positive balances. So we can delay it for a particular month and then we can purchase the computer. Because even if we are paying 50%, 30,000, we have only 8,500 cash available. We have to go for an overdraft again.